Hi everyone, a huge warm welcome to our Friday Roundup, a quick episode where we look at all the big happenings that went on this week, and we are not short of topics. I'm going to discuss why not your keys, not your coins, the regulatory crackdown that is coming, and a broad range of different aspects that are happening right now that are going to continue to put pressure on this market, and maybe when we might see it lessen off. So I'm going to dive into that today. And I'm also going to have a quick look at the Federal Reserve and then show you some things our clients have actually been saying recently, which I think is going to be super useful for everyone here. Okay, let's get on to, let's say, one of the drivers that really pushed the market down from that 200 weekly moving average, so around that 22,000 down to 20,000, also pushed Ethereum down quite far. And that is another big crypto firm or lending platform going insolvent. And this seems to be a massive trend. And unfortunately, with the reduction of liquidity, and when I say liquidity, capital in the market, because of what the Federal Reserve is doing and tightening conditions in traditional markets, a lot of that spare, free, and very abundant capital that was just flowing into crypto, going into protocols, speculating, is now rushing straight out. And it is really exposing, some bad actors or protocols that maybe didn't have their processes squared away, didn't have contingencies in place for, XYZ situation where suddenly liquidity is removed, pools become unbalanced. It's a little bit complex, but suffice to say, a lot of these protocols, too good to be true in some respects, offering you, 8%, 20% yield, which we saw on Anchor with Terra Luna. When you hear that sort of stuff, you just have to be so skeptical. And it's what we do teach in our course. Our course is absolutely geared towards managing your risk. So if you do go and decide to put a percentage of your portfolio into some of these protocols, USDC or some kind of stable coin, you're looking to earn outsized yield in some of these protocols versus a bank account, sure, that's fine. It's something we have done successfully in the past. But in these market conditions, we're seeing what can happen on the other side of that if things actually start to go wrong. And it is like a domino effect. And I'll get to why there is still contagion risk. So that means essentially when a couple of these bigger funds or firms or platforms go down, they're all interconnected across like a web throughout the ecosystem. And we just have to be super aware that risks remain for a further crunch in Ethereum, altcoins. Not so much Bitcoin at this stage, just gauged on how much is locked away, but you just cannot discount another flush below 20,000. It's absolutely on the cards. All right, let's get into Celsius, because this was what they posted out via email and all over Twitter that just threw people in an absolute loop. So Celsius is pausing all withdrawals, swap and transfers between accounts. Acting in the interest of our community is our top priority. Our operations will continue to share information. Community. Now, why they did this? Essentially become insolvent. They could not continue to allow customers to withdraw their funds because a lot of their funds were actually locked away in lending platforms. And they're off in speculative plays. So people have taken out loans, they're using it elsewhere. The collateral behind a lot of this just wasn't there for people to withdraw. And Celsius saw the writing on the wall. They're seeing their collateral just drop. The system is dependent on constant capital coming in as well. And it's almost like this death spiral, this self-fulfilling prophecy where if you don't have customers coming in and, boosting more collateral into that ecosystem, they're essentially, locking away a lot of their collateral for the long-term Celsius. They can't actually get access to it. So that's the issue here. They've been letting people take out short-term loans and all this sort of stuff in this merry-go-round, and they're in a massively tough spot. They have, debt and loans due that will get liquidated fairly soon if price continues to drop. And they've stopped this right now for customers, removing withdrawals, swapping and all that. So essentially they're buggered. And I don't know whether if you're in this platform or you went through this platform, you will ever be able to get your collateral back, so your coins that you've staked on there. I would just regard this as a solid learning experience. If you've been in this space for a little while, or it's just you're coming into it, use this as a massive learning experience just to not trust the hype, the marketing, and all that, and the returns. You've got to be hyper skeptical, because there are no regulatory authorities really here. You know, they might operate in the US or have licenses here and there, but there's a big difference between being licensed and being regulated. And this is what the traditional financial system has still going for it compared to crypto. This is still very much a immature space where essentially there's a lot of science experiments, and sometimes when the system is severely stress tested, like we're seeing a massive recession and meltdown in traditional markets, sometimes these science experiments are going to blow up. So watch Celsius. Also, I would just urge just to assess your risk broadly. If you are still in some of these other protocols like BlockFi and elsewhere, please assess your risk. If you are you know, heavily weighted into this project, if you have a large portion of your portfolio, your US dollars, or whatever you're staking or thinking of staking there, maybe look at that risk and think, is it worth that, you know, 1, 2 to 5% yield if this platform goes under and takes all my money with it? I would just assess that risk, pull back, be defensive, and wait this out. Wait for the, let's say, the dead bodies to float to the water, because you just do not know. No matter how legitimate they seem, no matter how good their marketing is, just please be careful out there, because Celsius, I don't think, is the last. You know, Terra Luna and UST was the first. Celsius is next. I'm going to show you again another fund that went belly up just next as well. So I think it's just going to get worse. But yes, this is happening broadly across the space, and I don't think it's going to be the last. So yes, so let's move on to our next bit of news, and it's with the same line as Celsius. Now, this is why the crypto space is in such a rough spot right now, in my opinion. We've got one of the major or largest crypto firms in the space. So they brought in a lot of investors, they had a lot of investments. You can put your money with them and they'll do what they need to do and earn you know, X, Y, Z every year. They were called Three Arrows Capital, and the rumor on the street is they have totally gone insolvent. And now the problems with Three Arrows Capital started with Terra Luna. They had about, I think it was 560 million, give or take, in UST and Terra Luna. That is now worth about $500. So that is a huge loss that they are never going to get back. They apparently highly levered themselves elsewhere. Self-fulfilling prophecy. They went belly up, and now they're really struggling, and they have tentacles in so many different DeFi protocols. This space is still incredibly small. I mean, it's about 1 trillion, got up to about 3 trillion at one stage, but let's just say the space is about worth 1 trillion. You know, the global financial market is so much bigger. This is a very small space. So logically, you'd assume that a lot of it is quite tightly connected. Now, Three Arrows Capital is a lot more important than you might think. It was essentially the lifeblood for a lot of these protocols. So that is incredibly concerning. If they're going insolvent, people are beginning to liquidate their holdings as quickly as possible. In a lot of these DeFi protocols, Three Arrows Capital has been, you know, unstaking from pools here and there, selling off all that collateral and adding sell pressure onto the market. So they are going to be a net seller. Same with Celsius. And there could be a few others that are selling behind the scenes, and they're going to be doing some things to try and hedge themselves against this downside risk, but they're in a lot of trouble. So just I'll read Main's tweet here. Three Arrows Capital, other funds and protocols, all with debt obligations amongst each other cooked. So essentially saying what I've just been saying, that they're all tightly interconnected, and a lot of their debts are coming due, and they can't meet their what we call margin call. It's where they either have to accept the loss or they put up additional collateral. Now, I believe that Three Arrows Capital is actually out of collateral right now. So likely more for sellers on the horizon, large unwind needed, regulatory FUD coming after UST, etc. Worst macro headwinds in BTC history. So yes, we're going through one of the most unprecedented periods of time for Bitcoin and crypto ever. We have never had this, or we've never lived through a moment in crypto where we've seen a recession and tightening liquidity to this aggressive extreme in traditional markets. So anything is absolutely possible. Now, with UST, Luna, Celsius, the regulators are coming hard. So in the US, they're going to come hard for these protocols. And you know what? I think we need to welcome this. Regulation isn't necessarily bad. Regulation is good. If it protects investors from getting absolutely wrecked like this, I think it's only a good thing. And again, these periods in bear markets especially are really good as a bit of a flush to get out all the bad actors, all the crap. And what gets left over essentially in these bear markets is what will last through to the next cycle. We get stronger, a lot of learning lessons are happening. The overall infrastructure of crypto gets stronger and better. but there's just going to be a bit of pain in the meantime. And we do not know where the bottom is just because of some of these overhanging issues. Of course, there are a ton of buyers coming in at 20,000 and 1,000 and Ethereum, but if suddenly 3 Arrows Capital or Celsius needs to liquidate, heavier bags, or they're forced to liquidate, we'll just push the market down. So we've got to be very aware of that. Now, I just want to point out that in our exclusive graduates community group, so these are for clients that have completed our course. So if you are looking to do our course, this is something that we have in motion throughout the entire period that you're with us. So we have a VIP support group where we provide that 2 months intensive support, and then you move into our graduates community group where you put with a bunch of like-minded investors, where we also update you on very important events. So we were very conscious of the risks happening over the last 2 weeks, and it's been insane. So I got in there as this was happening, as I was seeing it happen, and I just posed about the risks of 3 Arrows Capital and what it means for Ethereum and their price pressure, because you can see the amount of capital that they own in total debts and their net worth currently and the total assets under management. It's really starting to creep up where they become to that point where they have to fold, and I believe it's worse now. But you just see the capital allocation that they have, WETH, so basically Ethereum, USD and all that. There's really no Bitcoin there to worry about, but the concern here is Ethereum and their interconnecting web of liquidity. So all their capital that's gone out to these protocols, if they have to suddenly sell, what's going to happen to those protocols and the pools over there? Are people going to panic? And it's, again, like a death spiral, self-fulfilling prophecy, where people will see this risk, they'll take out their own capital from elsewhere, and it creates more downward pressure. So just need to be aware of that in the short term. It does sound very, very scary, and it can be if you're heavily invested in these, in a short amount of time. But if you are a long-term investor, this just provides opportunity for the longer-term picture. So for the next cycle, you can look at this going, okay, there might be a massive dump of Ethereum here, and you see some of our clients underneath scoop up that ETH. So if you have stink bids layered much, much lower at key resistance points, you might scoop up some generational bargains. So just keep that in mind. All right, just in line with this as well, from Glassnode, we always love looking at data just to back up our theories and see where the market is at. So Bitcoin long-term holders realized major losses equal to 0.007% of the market cap per day. This is almost as large as March 2020, and is the first major long-term holder capitulation event of the 21-22 cycle. So this backs up what we're seeing with these large institution platforms, Celsius, 3 Arrows Capital. A lot of this these assets that they've been holding for a very long time, they're obviously dumping it because we're seeing a lot of these long-term holders, they would be classified as long-term holders, are dumping their holdings because they are either forced to or they're worried. So that is something to watch. It's definitely happening, and he's hitting a lot of the major news services. Crypto funds, 3 Arrows Capital facing potential insolvency report. Yeah, it's they're in a lot of trouble. So we just have to really wait this one out, and the money involved is pretty crazy. And when you're dealing with a 1 trillion market cap, and when this fund has X percentage of that market cap, you just got to be a little bit concerned. Okay, so if we are looking at a major driver of what's happened in the S&P 500, and then by extension crypto, take away all the Celsius, 3 Arrows Capital and all that, it's been the Federal Reserve. So they've come out and raised interest rates above what was expected. So it was 0.5, then they raised it to 0.75. Now, to the layman, that won't mean much, but what it does mean is tightening further, it becomes harder to borrow money. Generally, investors in those situations seek safety. So they move out of risky markets like crypto, like stocks, and move into US dollars. So that is just at a high level what is happening here. And when you look at stocks and crypto, the market has tried to price in this moment. So we've seen a lot of volatility, meaning the market's been going quite heavily to the downside quite quickly, leading up to this announcement that happened yesterday or 2 days ago if you're on US time. And we've seen a lot of that volatility priced in already. Now, the next rate rise is next month. So we'll just have to see how those inflation figures come out and how hard the Federal Reserve act then. So in our premium groups, we discuss this in a lot more detail, I should say, about how hard the Fed can actually go, when inflation might tick back. the risks of going too hard too quickly and throwing the US into a recession. So there are a lot of interconnecting webs here, and it's when you start to get into more macro analysis, which I do enjoy doing with our mastermind clients. So let's just move on quickly. I want to show you just two amazing reviews that we have. So I want to thank our existing clients for providing these reviews first and foremost. So Richard and Dave, thank you so much for posting these. And if you're looking to undertake our course, just have a look at some of our reviews here. So just here as well, I found the team for CCI nothing but short of amazing. They can get right down in the trenches with you and go above and beyond. Can't say enough. Thanks. So really appreciate these reviews. The company is amazing. Initially, I thought it was a little expensive. It is worth every cent and much more. The course is top class. The webinars are 2 to 3 times per week, ongoing after you finish the course. So we provide video content all the time into our graduates course, VIP and mastermind group, keep everyone up to date as best as possible. We really want to provide the absolute top level cryptocurrency education in the world. That is the aim for us. And we are hoping we are delivering that. And by the reviews that we're getting, we hope we are. We know we're going through a tremendously difficult period within the crypto markets. These cycles do happen. This one feels a little bit more vicious because of traditional markets, but you do need that support going through these periods. I couldn't imagine, if I first started out and I was going through this by myself, trying to navigate these waters without a little bit of guidance from people who've been through it before. Also, just from the risk management side, these periods just completely reinforce those moments in bull markets where you think to yourself, oh, maybe I'll let that ride. I won't follow my strategy, take some profits, or, I'm going to go into this high risk, high reward situation and just, leave it there and maybe not think about it for a while. Bear markets bring that all back to the fore, and you're like, okay, wow, let's go back to basics, because I'm losing money here, I'm losing money there because I'm not following the basic process that I set out originally and what I learned from at CCI. So guys, hope you enjoyed this episode. Apologies, it's a little long, but yeah, and again, it's a little bit dark, this episode, but they're going to be a little bit darker. I'm trying to instill a little bit of positivity here and there, and it's always darkest before the dawn. And of course, in our VIP video and mastermind video that I'm doing today, I'm going to really dive into the charts, what the 200 moving average is looking at right now, also what it looks like on the monthly, which I think is really, really important, and whether 20K will hold or not. So guys, hope you've enjoyed this episode. If you are looking to join us at CCI and become a client, click the link down below and have a chat to one of our team. We're always open for a chat. You can also just keep watching our videos here as well. So have a wonderful day, guys. Wish you all the best. Ta, bye.